Day's business news now. Brian Quinn is with us. Europe, as we talked about at the top, they're really scrambling to formulate a response after being left out of US-Russia negotiations to end the war in Ukraine. One option could be to use frozen Russian assets to continue funding Kyiv's war effort, Brian.
So, Stuart, European and Ukrainian leaders are obviously very unhappy with the Trump administration's plan to negotiate bilaterally with Russia on ending the war without input from Brussels or Kyiv. As Trump is clearly looking to end U.S. financing for Ukraine's war effort, Kyiv has been pushing the idea of using frozen Russian assets to replace that funding. Roughly $300 billion worth of securities and cash have been frozen in the European asset clearinghouse Euroclear following Russia's 2022 invasion, most of those assets belonging to Russia's central bank. Some $50 billion in profit and interest from that capital have already been seized and funneled to Ukraine in the form of loans. The US and the UK had previously suggested seizing the entire pile outright. That idea, though, faced resistance at the time from European economic powers, notably France and Germany, who feared that it would set a dangerous precedent that could eventually destabilize the euro currency. In the current context, though, EU leaders appear increasingly open to the idea. Here's Finland's president this weekend.
The first phase is the pre-negotiation. And this is the moment when we need to rearm Ukraine and put maximum pressure on Russia, which means sanctions, which means frozen assets, so that Ukraine begins these negotiations from a position of strength.
Now, meanwhile, despite being rejected by Volodymyr Zelensky, Trump's proposal for a minerals deal in exchange for supporting Ukraine reportedly are not dead yet.
So Zelensky, of course, declined to sign on to Trump's plan over the weekend at the Munich Security Conference. That deal would have seen the U.S. get the rights to 50% of Ukraine's rare earth minerals, with Trump saying he wants $500 billion worth as he tries to wean America off its dependence on Chinese supply. Zelensky pointing out that the agreement as written did not contain any future U.S. guarantees for Ukraine's security and could instead be taken simply as payment for previous American military and financial aid. But the basic idea of cooperation between the U.S. and Ukraine on minerals extraction is reportedly still on the table. Ukraine has significant deposits of 20 out of 50 critical metals, like titanium, with 6% of the world's production. It has 1/3 of the EU's proven lithium reserves, and it's number 10 worldwide in zirconium. That metal sector remains underdeveloped, though, requiring significant capital investment in extraction and processing. Industry groups say that a deal negotiated in good faith could be a boon for the country. Take a listen here.
We understand that the Americans have more opportunities, more resources, and they are more influential, to be honest. And they will be able to protect the territories with their investments, build factories or plants that will be located in our country. And in the future, this can develop into a pretty good geopolitical alliance so that we don't have to shed any more blood on the territory of Ukraine.
Markets now then, Brian, how are they shaping up?
Asian indexes struggled a bit on Monday. The Nikkei in Tokyo ending just barely north of the flatline, despite new data showing Japanese economic growth beat expectations for the fourth quarter. Hong Kong and Shanghai made some tepid gains as well. Most Chinese tech shares lost ground after President Xi Jinping spoke at a private symposium with prominent business leaders, including Alibaba co-founder Jack Ma. Tencent, though, bucked that trend. Its shares popped around 4.5% as the social media giant begins integrating the new AI chatbot DeepSeek into its WeChat app. Here in Europe, a fairly flat open for London and Paris as investors wait to see what comes out of that emergency security summit in Paris today. The DAX in Frankfurt up around 1/3% at the open.
Finally for business, a boom in tequila consumption has left Mexican agave farmers with a little bit of a hangover.
Mexican law stipulates that tequila can only be grown in the state of Jalisco, where the agave cactus grows. More than 40 countries recognize the beverage as a Mexican designation of origin product. It sounds like a win for local producers, but a global tequila craze has led to some problems, notably overproduction. Eliza Herbert has more.
This tequila shot is causing more than just a hangover for agave producers in Mexico.
Between 2018 and 2024, exports of the spirit nearly doubled from 220 to just over 400 million litres. The rise in popularity led to a shortage in agave, and the price reached as high as $1.75 per kilo.
And that attracted a lot of people from outside the industry who wanted to get involved. They saw the profitability of the crop. And, well, who doesn't want to get rich from a legal, easy crop, right?
Then came oversupply. According to Mexican government figures, cultivation of the plant nearly doubled from 85,000 hectares to over 214,000 in the same time period. And there are now over 42,000 producers.
Some people sold their factories, their hotels, land and ranches to start growing agave.
Francisco says the price has now dropped as low as 40 cents per litre, not enough to even cover production costs, a situation which could worsen under Donald Trump's proposed tariffs.
The United States consumes around 85% of the tequila produced. So of course I'm concerned.
Germany, Spain and Australia are among other countries driving international demand. But the appetite appears to have dwindled in recent months, leaving the Mexican industry bracing for a turbulent 2025.
So overproduction, a bit of a problem there. But if they have too much tequila, Stuart, I think we can give them an address for one Leo McGuinn, who'd be happy to take some off their hands.
I was going to say I'll help as well, but we just have a party at this time of day tomorrow.